The Depository Trust and Clearing Corporation clears somewhere between $3 and $4 quadrillion every single year. This isn't just another financial entity. This is the backbone of U.S. market infrastructure. Every time stocks or bonds are bought and sold, DTCC is the organization handling the clearing and settlement behind the scenes. Now here, where things get really interesting. DTCC oversees roughly $100 trillion in assets, and beginning in 2026, they are preparing to tokenize a significant portion of that value. We're finally starting to hear more concrete details about which blockchain networks they are evaluating. And yes, XRP is part of that conversation. But it's not alone. Stellar, Sway, and Ethereum are also being openly discussed. So today, we're going to break down a brand new clip, unpack what it actually means, and then connect it to the bigger picture that most people are still missing. Welcome back to CryptoLabsNews and Happy New Year. In the clip, a DTCC executive makes something very clear. There is no single blockchain that can handle the scale of volume they are preparing for. By definition, this future will be multi-chain. But not just any chain qualifies. These networks must meet strict regulatory standards, compliance, transparency, built-in KYC and AML, the exact areas Ripple has been obsessively focused on for years. DTCC is being extremely cautious. Every chain added to their ecosystem must satisfy regulators and prove there's nothing questionable happening behind the scenes. And as these chains are integrated, DTCC plans to use an orchestration layer that allows assets to move seamlessly between networks. Mint today on one chain, migrate tomorrow to another, while preserving records, ownership, and compliance throughout the process. What really stood out was hearing Stellar and Sway mentioned out loud alongside Ethereum. That wasn't accidental. It confirms DTCC is closely tracking the same institutional-grade projects many of us have been following. And yes, XRP belongs in that group. Right now, DTCC's live settlement experiments are primarily running on permissioned enterprise infrastructure. Project Ion, built on R3 Corda and the Canton network, is already operating in parallel production for U.S. equity settlement. These are not public layer 1 chains like XRP or Ethereum, yet. Canton, in particular, is a privacy-enabled permissioned blockchain largely controlled by DTCC and digital asset. It's been selected to tokenize a subset of U.S. treasuries and other securities. R3 Corda and Canton form the internal rails. But here, the key point most people miss. That doesn't eliminate public blockchains, it sets the stage for them. DTCC has already filed patents outlining a digital liquidity token architecture that explicitly names XRP and Stellar. In that framework, Ethereum functions as a token issuance layer, while XRP and XLM act as anchor networks, bridge assets designed to move liquidity between systems at scale. This is exactly where XRP shines, not as DTCC's internal ledger, but as the neutral, liquid, cross-chain settlement asset connecting multiple networks globally. The patent doesn't claim DTCC is currently settling equities on XRPL, but it clearly shows forward-looking compatibility and institutional intent. And yes, liquidity matters. XRP's depth, speed, and global reach give it a major advantage over alternatives that are still navigating regulatory uncertainty in the U.S. DTCC executives have also been very clear about their broader vision, bridging traditional finance and decentralized finance without sacrificing investor protection. Despite claims that depositories won't be needed in the future, DTCC argues that centralized control still plays a critical role, especially in preventing overissuance and maintaining legal ownership integrity. If Apple issues 1,000 shares, someone has to guarantee there are only 1,000 shares, even after tokenization. That's the role DTCC continues to play, now extending that responsibility into the digital world. What's shocking is the timeline. DTCC openly states they are attempting to digitize more than 50 years of capital market infrastructure in roughly 50 weeks. That puts full acceleration squarely into 2026. We're already seeing proof of concept. Traditional shares can be converted into digital tokens with instant synchronization between off-chain and on-chain records. Trades can be executed on public blockchains, settled using stablecoins like USDC, and finalized in seconds, not days. In one demonstration, Apple shares were moved from a traditional ledger into a digital ledger in real time. The total share count never changed, only the settlement method did. That's the power of tokenization. Then comes the real breakthrough, delivery versus payment. Tokenized Apple shares sold after hours, paid instantly with USDC, settled in 2 to 3 seconds and fully recorded across ledgers. 24/7 markets, no waiting, no reconciliation delays. This is what mass adoption actually looks like. People won't care about blockchains, they'll just notice that payments are instant, fees are negligible, and nothing breaks. Heading into 2026, institutional momentum is accelerating fast. ETFs are locking up millions of XRP. Volumes are climbing. Analysts across the board are calling 2026 the start of crypto's institutional era, driven not by memes, but by market structure, regulation, tokenization, and real capital flows. Some firms still avoid mentioning XRP, but the infrastructure doesn't. The rails are being laid, the architecture is being finalized, and the bridge assets are being quietly positioned. At CryptoLabsNews, we're tracking all of it from Ripple and XRP to global regulation and institutional adoption. A full 2026 prediction breakdown is coming, and you won't want to miss it. Happy New Year, everyone. 2026 is shaping up to be a transformational year. If you got value from this breakdown, hit like, share it, and drop your thoughts in the comments. I'll see you in the next one.